Hi, welcome to the video day, 6th of June. It is Tuesday. Now, in today's video, we're going to be looking at two pairs, which are going to be Euro USD and Euro JPY. We're going to go to the charts in just a moment. Now, in terms of in this video, just want to go through how to trade big levels of support and resistance in terms of catching big trend changes. Now, in terms of most retail traders, they will not use this strategy. They will be trading too short term and they will get chopped by the noise of the markets. This strategy takes very little time. You focus on big levels and you look for big moves. Now, in terms of the strategy and also the pairs, what we'll do is we'll go over the charts right now. Just before we do so, though, if you want to learn our trading strategy, check out all our trading techniques as well as our daily technical sentiment analysis of 14 FX pairs, including the two we're going to look at right now. Just click on the link beneath this video and get limited live access to our member center. You can also follow us on our Facebook page and join our Facebook group of traders if you wish. And finally, actually, you can join our free educational mailing list. Right, let's go and take a look at the pairs. It's Euro USD first. All right, just on Euro USD, we became really interested when we came up towards the 111 level. You had three tail pokes at the level. Okay, it's also a monthly resistance level as well. And then we saw the decline off the level. We're down around just 300 odd pips. Okay, now in terms of this fall, why did we fall so hard and why do we think the euro will continue to the downside? Now, in terms of anyone new to our videos, trying to trade purely technically is really difficult. Markets are noisy. You need to know where the big money is behind the chart to catch a turning point into a big technical level. And also, you need it to project how far a move might go. You can't do that technically. Okay, now in terms of this one, we'll come down quite nicely. I just want to skip over to this chart, which is the chart in our member center, which was earlier in the day. We had a little bit of blue in the euro. Now, in terms of we're holding from 110.40, stop at 108.20, targets 105, the monthly support at par. So 700 pips more to the downside in our view. Okay. Now, in terms of catching the turn, the sentiment was too bullish here. I'll show you some charts in a moment. And it's still too bullish down here. Now, if you want to trade this one, you can trade off these resistance levels. 108 is a really big level. That's where our stop is behind, okay? And just look for a move down to 105, then par. If we don't rally up, you could always sell weakness. Okay, at the minute our stop will remain behind second level, but we will come behind this level if we see significant weakness. You can see updates obviously in our member center on our stop, but we need to know why the euro fell from here and why it's going to continue to fall. So we are going to go to here. Now, I've shown this chart before, but it's still relevant. Okay, when you look at the euro, when we came up towards the 111 level here, speculators were piling into longs and then prices dipped down. Okay, look where specs are. They're only off the recent high and they're longer than they were at 111. Okay, I'll go through why they want to be long and why I think they're wrong in a moment in terms of the fundamentals, but showed this chart, still relevant from a couple of weeks ago. It shows Euro USD longs in grey here against Euro USD shorts. Wide gap, that is the net positioning. Okay, not far from a 5-year high in terms of euro longs. Okay, so it's another look at how bullish the market is of the euro. This is another chart again from about a week ago, but it's still relevant. CTAs, managed money, just really long of the euro. Okay, so sentiment way too bullish in our view. Now, in terms of the fundamentals. Right, first chart is showing economists' growth forecasts for regions. There's three here. There's China here, big downgrade. US had a reasonable downgrade. Euro, just a tiny downgrade. Okay, market is looking for the Eurozone to do relatively well going forward, but it won't. Okay, I've shown these charts before, so I'm just going to show them quickly. You can go and read the full article. Europe unlikely to dodge a recession. Leading indicators have plummeted. Industrial production will follow. Another couple of charts here. Soft data in Eurozone. Cards, House of Cards beginning to fall. Both hard and soft data are heading south. Okay, go and, like I said, read this article if you wish, link beneath the video. And contracting money supply. Okay, money supply has collapsed, loans have collapsed. Why? Because obviously the ECB have hiked interest rates. Now, in terms of the market being bullish about the EU economy going forward, right, just want to take two articles I saw this morning on trading economics in relation to EU data. German factory orders unexpectedly fall. They missed forecast. Germany is already in recession. The market was looking for a higher number. Same here. Euro retail sales unexpectedly flat. They were looking for an increase. The zone is heading for a recession. If the ECB do hike rates as the market expects, which we do not think they will, then they will just make the recession even worse. So that is our reasoning for being short the euro and continuing to be short the euro. Speculators don't want to give up the long view. Okay, so like I said, you can sell back to these levels of resistance. If we get a nice red, you could sell, put your stop behind this first level. If you want to follow how we're trading this on a daily basis, obviously you can look in the member center. Now, in terms of Euro USD, it's already in a downtrend in our view, which will continue. Euro JPY just about to confirm a move in our view, so let's now move over and take a look at it. Right, in terms of the euro, we know that speculators are heavily bullish. Now, in terms of the cross, it comes from the two majors. We've already looked at Euro USD. Here we're looking at what's going on in USD JPY. Now, if we look at speculative positioning, it's very short. Okay, you can see it here on the right. Almost as short as back in November when you saw that rally. Okay, so we know speculators heavily long the euro, short of the yen, and we're looking for a reversal. So let's go and take a look at the chart. I'm going to draw this one. First of all, why are speculators so bullish of the euro and bearish of the yen? What's the fundamental behind it? It's based upon a dovish Bank of Japan. I'm sure most people watching this video knows that the Bank of Japan are dovish. They hold interest rates down. Obviously, the market is looking for a hawkish ECB. The majority view, and you go and read forecasters, no reason to buy the JPY. That's the view of the majority. But when you get that, it's probably going to see a trend reversal. The market is too bearish of the yen. If we look at price action, okay, it's a bit similar in terms of the big level to Euro USD. It came up into a big level. Obviously, the big level in Euro USD was 111. The big level here is 151. Market was looking for a break higher. Majority looking for 155 or higher, but they don't get it. They're too long. We come down. Then they buy the dip. They try again to take out 151. They can't. And we drift a little bit lower, but there's no big downside at this moment in time. How would you play it? Firstly, you could play it. I'll go to the target in a moment. You could play it on a failed break higher. First resistance, major resistance. If we break above 150, just look to sell back through the round number. Something like 149.80, stop 151.40. Okay? Now, what if we do not break 151? Okay, just draw that as a trajectory. We note that level there. 150 is the support level if we break low. Where would you sell on a break lower? I'd sell here. Through the two tails I've just drawn through, which is, sorry, I can't get my line straight. There we go. So here you'd be looking at 148.70. So you sell the break lower, stick the stop behind this level of resistance. What is the target for us in terms of how long the speculators are of the euro, and from our kind of experience of the COT, I'm going to say we should get down to 143. It's a good risk to reward. Okay, obviously if it broke higher and you sold the failed breakout and it worked, that would be an even better risk to reward. Now if we think back to Euro USD, it did go into a nice downtrend. I'm looking for this one to do the same. We shall see. But I think in terms of, if you're a retail trader trading big levels, okay, looking at the sentiment behind the chart is a great way to trade. And also, if you're looking for big trends, I've said this in numerous videos, you cannot do it purely technically. You need to know where the big money is behind the chart. It's a simple strategy, doesn't take a lot of time, and it can be really profitable over the longer term. And you basically avoid the frustration of the noise the market constantly taking you out. Of course, you get stopped out using this strategy as well, but risk relatively low against potential reward. Right, that's the video. Thank you for watching. Hope you found it useful.